Okay, I hope that's us.
Yes, I think we're live.
Brilliant. Hello, everyone. Welcome to Lunchtime Live. It's the first one of these in 2015 that we've done.
It is. Happy New Year.
Happy New Year to everybody, and happy self-assessment season.
Yes.
Hooray. We know that obviously this is a really, really big time of the year for self-employed people who are approaching the deadline, who haven't yet either started or filed their self-assessment tax returns. So that's why we've set up this this Hangout. So we're going to be taking questions about tax returns, self-assessment, small business tax, anything that's involved with doing your tax return.
Absolutely.
As a bit of introduction, if you haven't been to one of these before, hello, I'm Adrian Mather. I work in the comms team here at FreeAgent, and I'm joined as ever by our brilliant Chief Accountant, Emily Coltman, FCA, who is our sort of resident small business tax accounting, bookkeeping, and financial guru when it comes to small business stuff. So she's going to be on hand and to answer any questions that you do have about self-assessment and tax. If there's anything that you're worried about or that you need a little bit of help, just write it down in the Q&A panel, which should be on the, well, either the right or the left of the screen. There's a load of buttons just on the left if you're watching this. One of those should be Q&A. If you click that, then there'll be a box that opens up on the right, and you'll be able to just type in a question there. We'll see it and we'll answer them as and how we get them.
Indeed.
Now we do have one already there from Kerry, who's left one in advance. I am going to get to that in a bit, but I think before we do anything, I'm just going to start this by asking who actually has to file the self-assessment tax return? What kind of business?
Who has to file a tax return? Well, basically, if you are the owner of a business, whether that's as a sole trader, which means you're self-employed, whether it's as a partnership, whether it's as a limited company and you're the director and shareholder, you will almost certainly have to do a tax return. There are other reasons why you might have to do one, and I'm actually delivering a webinar at 3:30 this afternoon, which is all about who needs to fill in a self-assessment tax return, which you're more than welcome to join me for, because there I'll be exploring in a bit more detail areas where, for example, you're not a business owner. So, for example, if you've got property rentals, or if you are a trustee and you get income from a trust. But if you're a business owner, 9 times out of 10, you're going to do a tax return. The 10th is if you are the director shareholder of a limited company, the company is dormant, or it's paying you nothing, no salary, no dividends, no expenses reimbursed. If that's what's happening, HMRC might actually say they do not want a tax return from you. They've actually just done that to me because I'm full-time employed by FreeAgent. I do also have a company of my own, but I draw nothing from that. So they've said, we don't want a tax return from you anymore. If they say they don't want a tax return from you anymore, it's fine to believe them. But if you get another source of income, so for example, if I started self-employment, if I took up a sole trade on the side of my FreeAgent work, I would actually have to start filling in a tax return. So it's actually your responsibility to make sure HMRC know about any source of income that you might have to do a tax return for. Mm-hmm. Yeah, it's your responsibility to know and to tell them.
Okay, and in terms of when you actually get around to completing and filing in the first place, how do you go about that? What would be the stage?
How do you fill in a tax return?
Precisely. If I was coming to this for the first time, if I was setting up in business for the first time, and this is the first year of self-assessment I have to go through.
Right, okay.
Just a quick basic, what do I have to do now?
Okay. Well, what a tax return looks like is there's a section that's called the main return, which is basically the anatomy, or the main section of the tax return. So main return includes common tax reliefs, common income types like bank interest, tax relief on things like charitable donations, if you've given money to charities under gift aid, things like that. So everyone who does a tax return has to do a main return. After that, you get what HMRC call a set of supplementary pages for each other kind of income you might have. So, for example, if you've got a job, you'll do employment pages. If you're self-employed, you're a sole trader, you do self-employment pages. If you've got a partnership, you'll do partnership pages, and so on and so on. if you've got more than one of a certain kind of income. So for example, if you've got 2 trades as a sole trader, you'll do 2 sets of self-employment pages. So for example, my father, till he retired, was a self-employed pharmacist. He is also a researcher and photographer of antique shotguns. So he, or I on his behalf, prepared 2 sets of self-employment pages, one dealing with his pharmacy income, the other dealing with his research and photography income.
Okay. We're going to start looking at a few of these questions now. As I say, if you're watching online and you do have a question, just post it up there. Did you see that there was one from Nick who said, has the presentation started, because I can't see a thing? I hope that it is, and that you can. I've just popped a post up on the event page as well, just to let everyone know that they actually have to click the video to watch this as well. So hopefully that'll set you and sort you out now. We'll take Kerry's, who basically says, I've noticed that there's an error on my P11D that was submitted last year, and I sent a revised figure over to HMRC, as it also affects the NIC Class 1A company contributions. Is it okay to use this revised P11D figure in my SATR?
Kerry, if you sent the revised figures to HMRC, that's exactly what you should use on your tax return. You should use the revised correct figures because you've notified them to HMRC. That's exactly the right thing to do. Excellent.
Okay.
Yep.
And that one's done. So we've answered that one first. So hopefully, Kerry, that's really good. And you come back and you'll be able to view this afterwards. I think as well, if you haven't already noticed, this month, we've also been running self-assessment Q&As on Wednesday and also on Sundays as well. And we'll be doing them through basically throughout this month. We've actually had a couple of really good questions from those, which I'm going to pose to you before we start getting into the nitty-gritty of sort of what you can and can't claim for particular stuff. We had a question through on our Facebook page on Sunday from someone who says, as a self-employed personal trainer, do I register as a sole trader or a limited company, and what are the differences when it comes to?
Basically, if you are self-employed, you're a sole trader. If your business goes through a limited company, then you're not self-employed, you're an employee of the company. That's just a picky accountant's tax distinction, which I just wanted to make clear to start with. Mm-hmm. If you're self-employed, you're a sole trader. In terms of whether you should set up your business as a sole trader or limited company, there are no hard and fast rules. There are advantages and disadvantages to both sides, which I'll just outline a little bit for you. If you're a sole trader, basically, that is the simpler option because you've only got to file 1 document a year to the authorities, which is your own self-assessment tax return. You also are the same legal entity as the business. The advantage of that is that you can basically empty the business's bank account, and HMRC don't care because they view things like your tax bill as a sole trader. They view that as a debt of you personally, not of the business. So there's no legal separation between you and your business. The good side, as I say, is that means you can take as much money as you like out of the business bank account. You will be personally responsible, though, for meeting the business's bills. And that is on a day-to-day basis, or if the business gets sued. If the business gets sued, then your own assets, like your house and your car, could be taken and sold to pay those debts. Watch out for that. I have never known that happen to anyone in real life, but I'm sure it does. So just watch out for that. The other point about being a sole trader is that you can actually pay more tax overall for you and your business than if you run your business through a limited company. That's why the route of limited company is quite popular, because it does mean you can save tax. But because of the different and harder accounting structure of a limited company, your accountant's fees will go up. So it may well be that if your business is very small, any tax and national insurance savings will be outweighed by the extra accountancy fees. So crunch your numbers carefully. Limited companies, if you're running your business through a limited company, you will have to file at least 4 documents to the authorities every year. So you'll have to file a set of accounts for the company, a document called an annual return for the company, which must state its directors, shareholders, and where it lives, its registered office address. Those documents both get filed at Companies House, and they are on the public record for anyone to view. And then you also have to do a tax return for the company and a tax return for yourself. So that's 4 documents that have to be filed. A limited company is a separate legal entity from its directors and its shareholders. A limited company has a business, and a legal identity in its own right. So that means the company can enter into contracts, the company can be sued, and it is the company's assets that will be taken in that situation. So things like the company's computers or furniture, but anything that belongs to you personally, say your house or your car, they're safe. Unless you have, for example, given a personal guarantee on a bank loan, or if you've been found guilty of wrongdoing, then in some situations your own assets can be taken too. But in most cases, any creditors suing your company can only touch what belongs to the company, not what belongs to you. And also, if you're running your business through a limited company, you can overall pay less tax. So overall, that's you and your company can pay less tax. How can that be? Well, basically because sole traders have to pay national insurance on their profits, limited companies don't. That's the main difference. You also need to think about legal responsibilities, because as the director of a limited company, you have a legal responsibility to, for example, safeguard the company's assets. So that means, for example, not leaving a company laptop on a train. Something like that. So sole trader, it's simpler, it's more straightforward, because you haven't got to remember that you haven't got to think about how you're taking money out of the business, but you can pay more tax and potentially your own assets are at risk. Limited company, your assets are safe, you can potentially pay less tax, but there's legal responsibilities, there's more documents to file. Also, there are rules around when you can take money out of the company. If you take too much money out of a limited company, you can end up paying more tax. So it's probably swings and roundabouts, depends on what you find most important. Is it simplicity? Is it saving tax? Is it protecting your own personal assets? And also, how much tax do you stand to save, and how does that weigh up against your accountancy bills?
Okay, I think not quite following on from that, but sort of, aligned slightly. Just like to, who doesn't have to fill in the self-assessment?
Who doesn't have to do a tax return? Okay, that's a very interesting question. Well, as I mentioned before, you don't have to do a tax return if you are the director of a dormant company. On that basis only, you do not have to do a tax return. It's actually quite important to think about sort of each different source of income you might have and when you might have to do a tax return based on that. Because, for example, there are limits to, let's say, how much bank interest you receive before you have to do a tax return on the basis of that. Ditto property income. For example, if you let out a room in your house to a lodger and you're earning under £4,250 a year, and there's nobody else living in the house or paying household bills, you don't have to do a property income section of your tax return. So you need to think about, do you have to fill in a particular section of a tax return? Because if, for example, you let out a room in your house to a lodger, and you get £10,000 a year from your lodger, because he's a nice generous lodger, then you would have to do a property income section for a tax return, which means you have to do the main return as well. And it means you have to report to HMRC things like your bank interest, any dividends you've received on your shares. If you have to do a tax return, you have to tell HMRC about all your taxable income, which means you do also have to do a set of employment pages and report your employment, even though HMRC will already know about your salary because your employer will tell them about it. If the only income you get is income they already know about, like income from a job, you won't have to do a tax return. Basically, though, if you get income that HMRC wouldn't otherwise know about, like property rental, like self-employment income, like income from a trust, like when you sell something like a large valuable painting and you have to pay capital gains tax on it, HMRC would not otherwise know about that, so you need to do a tax return in that context.
Okay, and when it comes to including income on your tax return, can you sort of elaborate a little bit on that, about sort of what a bit more about what you'd include, when you'd include it and stuff? So I know that if you're using the cash basis, then there's
that's true.
There's a different set of sort of rules and restrictions depending if you're not using it.
That's absolutely right, Adrian. Yes, indeed. So in the context of most income, so things like employment income or bank interest or dividends, you put that on based on what you were due to receive in the tax year. So for example, if you've got a job, your employer will give you a form P60, which will say this is how much salary you earned in that year, how much taxable income you got from your job, and how much tax you paid. Now the tax year always runs from the 6th of April one year to the 5th of April the following year. Historical reason for that, which is quite interesting just as a side tangent. The calendar year used to change on the 25th of March, which is the date of the Annunciation of the birth of Jesus Christ, 25th of March, Lady Day. In 17 something or other, which I can never remember the date, Britain switched from the Julian calendar to the Gregorian calendar. Julian calendar was actually 11 days behind. They had to cut out 11 days. And the calendar year was also changed to run from the 1st of January to the 31st of December, but the tax year wasn't. So there's 11 days between 25th of March and the 6th of April. That's why the tax year starts on the 6th of April. And as I say, it was never changed when the calendar year was. I've no idea why. So that's why we've got such a weird tax year.
I was going to say, moral of the story, that's why you think tax is archaic in this country. That's why.
That's one reason why anyway. Yes, exactly, Adrian. But in terms of when you count other income, if, for example, you're self-employed, the basic rule of thumb is that you include on your tax return your profit for the accounting year that ends in the tax year that we're looking at. Now, a lot of sole traders pick the 5th of April as the year end just to make it easier, because then you know which 5th of April finishes in the tax year. It's the one the tax year finishes on. So, for example, in the tax year that you're filing tax returns for right now, which is the one that finished on the 5th of April 2014, you report your profit for 6th of April 2013 to 5th of April 2014. HMRC do also say that if you prepare your accounts to the 31st of March, they count that as matching the tax year. But let's say you do your accounts each year to the 31st of December, then what you'll be reporting on your tax return now is your profit for the year ended the 31st of December 2013, because that is the accounting year that finished in the tax year to 5th of April 2014. That is the 31st of December that comes between 6th of April 2013 and 5th of April 2014. So you report your profits for the accounting year that ends in the tax year in question. There are special rules if your business is just starting, just ending, or is changing its accounting year end date, but I won't go into that. In terms of when you're self-employed, well, when do you actually count your income? When does it go into your accounts? That can be done in one of two ways if you're a sole trader. The first way is the traditional way, when you include income when you earned it. So, for example, if I'm doing accounts to the 5th of April every year, and I earned some money in March because I did some bookkeeping work for Adrian in March. I didn't invoice Adrian for that till the end of April, and Adrian didn't actually pay me for it till the end of May. Which year does that go in? Well, it's actually the year to the 5th of April 2014, because I did the work in March. Even though I haven't invoiced Adrian for it yet, I did the work in March, so that's when I've got to put it in my accounts. The other method, which you can use as a sole trader if your business's income is under the VAT threshold, which for 2013-14 was £79,000 a year, what you can do then is you can actually include your income in your accounts on the basis of when you actually got the money in your hand. So that's called the cash basis. And in that case, using the example I just gave, if Adrian hadn't paid me till May 2014, that money actually goes into my accounts for April 2014 to April 2015, because that's when I got the money from Adrian. So if it's traditional accounting, it's when you earn the money. If it's cash basis accounting, it's when you got the money off your customer.
Excellent. So yeah, I hope that makes things a little bit clearer there. In addition to that, if you have a job and you're also self-employed as well, then I take it you'd have to put both of those income sources on your tax return. It wouldn't be that HMRC just knows what you've already, what you already have.
Well, the answer is actually yes to both questions. Yes, they do already know about your salary and what tax you've had to pay on that, because your employer will have told them about it when they run their payroll and report it through RTI. But you do actually still have to do a set of employment pages as well as your self-employment pages, even though HMRC already know about the income from your job, they actually have to view it holistically. They have to sort of look at your income as a person all together. So they have to look at your employment income, they have to look at your self-employment income, also any property rental income, income from a trust, income from bank interest. So that's exactly what you have to do. You actually have to report all the different kinds of income.
Okay. So basically, if assuming I have all of the information together about how much income I've earned, I have all of the documents about how much money is coming from trust, how much all my savings, everything else. In terms of tax deductible expenses, because this is obviously a big thing for a lot of people that we hear from every year for self-assessment. Can you give us sort of a brief overview of sort of the main things that people need to be looking out for here?
Yeah, certainly. So when you're thinking about tax deductible expenses, so this is if you're a sole trader, because if you're running a business through a limited company, then the expenses and income for the company actually go on the company's tax return, not your tax return. When you're the director of a limited company, what you put on your tax return is your salary and dividends and reimbursed expenses and benefits from the company. So this is purely in the context of sole tradership. If you're a sole trader, basically you can use expenses to reduce the amount of profit you pay tax on. That's what Adrian means by saying expenses are tax deductible. Also, synonyms for that are if an expense is allowable, if you can claim tax relief on it. That all means, can you use that cost to reduce the amount of profit you pay tax on? So some critical examples. If you are a sole trader and you travel on business, then if you have to buy food and drink when you're out and about on business, you can actually only claim the cost of that food and drink in 3 circumstances. 1, if you're away overnight on business. 2, if your business is outside the normal run of your business, if that journey is outside the normal run of your business. So for example, if I have a business and I'm based in Edinburgh and I go down to Newcastle to attend a course, I can actually claim the cost of food and drink that I buy in the context of that journey, so long as the course is a business course and qualifies for tax relief itself. Or business is by nature itinerant. So for example, you are a piano tuner, or you are a chimney sweep, or you are a jobbing builder. You spend a little while on each site and then you move on. Your business is by nature itinerant. You can claim the cost of your food and drink. But HMRC say in any other circumstances, you actually have to eat to live, and therefore they will not allow claims for food and drink in any other circumstances. We ran an event here yesterday, and I actually had a question from a lady who said that as a graphic designer, she needs to get out of the house for inspiration. She goes to a coffee shop so that she's got different surroundings. She buys herself a cup of coffee there. Can she claim it? The answer, strictly speaking, is actually no, because it's food and drink, and she would, if she was working at home, she would have to drink anyway. She would have to have a drink of water every now and again, or a drink of coffee, or what have you, and that wouldn't be claimable. So that is actually not allowable. Also, if you are entertaining someone to food and drink, I had a question from someone who said they have to buy coffee for interviewees, or you might well have to buy coffee for freelance colleagues that you work with, or something like that. That's actually not allowable because it counts as entertaining, business entertaining. Only the cost of entertaining bona fide employees is actually allowable. So that's just an example of food and drink. There are others around things like clothing and business use of home and travel, but I'm going to ask Adrian if he will be so good as to share the infographics.
Certainly will, we do.
Because we've got a few more questions popping in,
which
is great.
Certainly will, we do. We've got certainly an infographic about can I claim for lunch and food and drink on the go. We've also have a clothing one, and we do have a couple for the business use of your home as well, which I was going to get into here, but it's actually quite a pretty complicated.
It is, Adrian's right.
As I've been writing about this morning. So what we'll do instead is we'll just actually link to the infographics that we have, which are pretty detailed. They tell you sort of what you can and can't claim, and also it gives you a sort of method for calculating how much of the house that you have as well. And it's probably a lot easier to see that in sort of graphic form than for us to talk about it.
Also, we've actually got a white paper about what expenses you can and can't claim, which I think would be brilliant if we could also share it.
Yeah, we'll put the. I think it's in an A to Z sort of format at the moment, so we'll post that up as well. But it's a full, as Emily says, it's a full list of. Fairly extensive list of expenses that you can and can't claim. So hopefully that helps. But I'm going to take this question from Nick. It's sort of in a few parts. So I'm going to take them one at a time because I think they just run into each other. She says the tax return that we'll do soon is for 2013 to 2014.
Correct, Nick, that's absolutely right.
He says if from April through December there was no income, but then they started a new limited company in January, but done nothing salary-wise until May, what do they put on their self-assessment?
That is a very good question. So, Nick, I'm going to assume that you were a sole trader between April and December. It depends if your business is actually finished or if not. If your business is still, theoretically speaking, ongoing up to December, then yes, you do have to do a tax return even if it had no income. In terms, and so you actually would put a series of zeros on your self-employment pages. But remember also to look out for any expenses you might be able to claim, because if your self-employment makes a loss, you might be able to get a bit of tax relief on other income. That's not something I'm allowed to go into with you here and now, but it's something you should discuss with your accountant. In terms of your employment with your limited company, if you're not drawing a salary from the company and the company's not paid you a dividend, it's not provided you with any benefits like medical insurance, and it's not paid you back any expenses, you won't actually have anything to put on your employment page. So what you put in is your PAYE reference and just zeros for your salary and tax. But again, I would have a chat with your accountant about that just to make sure you keep correct.
Yeah, and I think with any of this, if there's something that you're really not sure about, then do go and speak to a professional or your own accountant.
Absolutely.
We're kind of limited with what we can talk about here as well. We can sort of give tips and guidance, but in terms of actual sort of financial advice, we're not actually legally allowed to do that. So yeah, if there's something sort of in depth that you want answered and that you want help with, then we do recommend speak to your accountant.
Absolutely.
And if you don't have an accountant, we do actually have a page on our website that lists a lot a lot of free agent friendly ones. So do go and have a look at that.
Yes, I'd echo that. Because much though I would like to be able to advise exactly what you should put on your tax return in what context, as Adrian says, we're not actually legally allowed to do that. So if you've got specific questions about your own accounts, then do speak to your own accountant, or as Adrian says, find one amongst the free agent friendly ones.
Excellent. I think we've touched on expenses, and we're going to put obviously all the links to the expenses up now. So for the next stage of filing a tax return, so I've put my income in there. I have all my expenses too. It's all hopefully done and dusted. I've ticked all the boxes. What do I do then? How do I actually submit it? Okay,
well, you have to file it to HMRC, and given where we are now in the year, given that we're past the end of October, you've got to file it online. So you need to make sure that you are registered with HMRC and that they're expecting a tax return from you. You can do that by going to hmrc.gov.uk and you click the link that says login or register for self-assessment. Once you've got all your numbers together, as Adrian described, once you've also got all the reference numbers you need, so that would be your unique tax reference, your national insurance number, and your ID and password to access HMRC's website, you file the return online to HMRC. They will give you what's called an IR mark once they've accepted it, which is a long string of letters and numbers. You need to keep that safe, because if HMRC ever say, oh, we never got your tax return, you can say to them, oh, yes, you did, and point them at the IR mark. And then do not forget to pay your tax. Filing your self-assessment tax return online is fantastic. If you must do it by the end of January, or you'll get a £100 fine from the revenue, but you have also got to pay them what is due. So you need to remember to make that payment, and it has to be in HMRC's accounts by the 31st of January. But, so don't actually send the payment on that day. Make sure it is there by that day. Watch out for that if you're using something like, I think Bax payments can take a couple of days. I'm also trying to remember what day of the week the 31st is. It's a Saturday. So remember, Saturday is not a banking day. Make sure that the money is cleared into HMRC's accounts by the day before, the Friday, not by the Monday, or they'll charge you for late payment of tax.
Okay, then we'll go on for another 5 minutes. That's right. So if there's another question, anyone wants to ask anything, do put it in and get it in quickly. Otherwise, we'll be signing off in about 5 minutes' time. So I'd also, on that last point, echo with Emily. If you haven't got your UTR number yet, or you haven't registered, do it now. Do it right away.
Absolutely. Adrian is right, because the reason why Adrian is saying do that right away, even though today we're still not halfway through January yet, but if you haven't yet registered with HMRC, they actually have to send you what they call an activation PIN number, and they send you that by post. So it can take up to 7 working days to get to you. So you need to make sure that you've got that registration all set up. So I couldn't agree more with what Adrian has just said. If you haven't yet registered with HMRC to file a tax return, do it now.
Yeah.
Do it the minute this Hangout finishes. Don't wait, just go and do it.
Because the amount of people that do end up waiting a bit too long, and then they get to the 31st and they're hanging by the by their letterbox waiting for it to arrive.
Exactly.
And, hedging the bets whether it actually does that day or not.
Exactly.
It's more than you'd think.
Because remember that you're going to be charged a flat £100 fine if your tax return is so much as a day late. Remember too that if you pay your tax late, you'll get charged interest. So don't risk it. Register now if you haven't already done so.
Good stuff. When it comes to actually filing, once you've filled everything out, how many different ways are there to do that? Because obviously you can do it through HMRC's website, but is there any other way that you can?
There certainly is, and of course,
this is a slightly leading question.
Yes, this is a slightly leading question. I think Adrian will knock my block off if I don't actually say you can file your tax return through FreeAgent. If you are a sole trader or the director of a limited company, you can't, unfortunately, if you've got a partnership. Really sorry, we don't support that because it's actually really quite complicated and it would take our developers months to build that. So I'm really sorry, you won't be able to do that. But if you're a sole trader and your only other income is, say, employment or something that's got to go on the main return, you can file your tax return through FreeAgent. If you're the director of a limited company and the only other thing you need to do apart from employment pages is the main return, you can file through FreeAgent. Unfortunately, any other types of income, say property rental or capital gains, that would exclude you from being able to file your return through FreeAgent. So sorry about that. Again, our developers have only got one pair of hands apiece. So much though we'd love to be able to provide that for you, we can't just yet. If FreeAgent can't help you, your accountant might have their own software that they can use to file tax returns, or there are other commercial products out there. TaxCalc is one favourite of mine. If you've got things like property rental income that mean you can't use FreeAgent, you might well want to have a look at that.
Right. So that's good. There are options out there, but again, it's one to go and ask your accountant for as well. If you can't use FreeAgent or you're not currently a user, then there are options out there. Exactly. Although we would thoroughly encourage everyone to use FreeAgent.
We want everyone to use FreeAgent if they can.
What we'll actually do is we'll post a link through to we have a little 4-minute video as well, which shows you how you can do that within FreeAgent. So we'll post that up on the event page as well, and a link through to the self-assessment page, which should give you a little bit more information about doing that. I suppose we've touched on filing, we've touched on paying the tax. Can you briefly just give us like a few of them, like the big mistakes that people make when it comes to self-assessment? Just a couple of the real biggies to look out for. Yeah.
Okay. So a few things to watch out for are: don't miss expenses out, particularly things that you either paid for out of your own pocket or that are allowances you can claim. So things like business use of home, things like travel in your own car. You can almost certainly get tax relief on those expenses. Don't miss them out. Make sure you're including your income and your costs as at the right days. As we described earlier, look at whether you're using traditional accounting or cash basis and make sure that you include the income and the costs when you should. If you're including bank interest or dividends on the main return, remember that it's operating for the tax year. Don't get confused, particularly if you're the director of a limited company. Your dividends go on your main return and they go on for the tax year, 6th of April to the 5th of April. If your company's accounting year is different, don't put in the dividends for the accounting year, it's the dividends for the tax year. And if you've got looking again at bank interest, leave off interest from that's paid to you tax-free. So that's, for example, on an ISA. And also, if you have a joint bank account, remember you are including only a half share of your interest. So if you have a joint bank account with your spouse, you include half of the interest on your tax return because the other half goes on theirs. So that's just a few things to be aware of.
Excellent, good stuff. Oh, I hope that's helped. Thanks very much if you come and listened. I see Nick's come back and says thanks very much. Not a problem. Thank you for putting your question in. So we always love getting questions and being able to answer them as best we can. If you go and have a look back onto the event page, you'll see that the FreeAgent elders have already put up all of the infographics and the links and everything else that we were talking about. So you can go and have a look and see everything there. If there's still something that you're unsure about, do go over to our website over at freeagent.com and have a look. There is a ton of information about self-assessment, tax, small business accounting that's over there, which should be of help to you as well. So do go and check that out. As I was saying earlier on, we are running a Wednesday and a Sunday Q&A throughout the rest of this month. We're doing the Hangout today in lieu of our usual Q&A. But Sunday is Self-Assessment Sunday, which will be taking place at 2 o'clock.
It certainly will.
2 o'clock GMT, so that's British time, over on both Google Plus over here and also on Facebook as well. I'll be setting up both of those event pages today. So if you keep a lookout and follow us on both, so that's Plus FreeAgent on Google Plus and FreeAgent app, all one word, on Facebook, then you should be able to see those event pages. And do come along as well. It'll be an hour long on Sunday, text Q&A, and basically if there's anything that you want to ask, just post them up. Actually, Nick has just come back with one more question, which, we'll take it, of course.
What are the upcoming limited company dates? I'm really sorry, Nick, I don't actually understand that question, but given that we're coming to the end of this, if you are stuck with that, can you post that question onto our Google Plus page with a little bit more of an explanation as to what you mean, and we'll come back to you there. Okay, that's all right.
Not a problem. I said yes. Self-assessment Sundays, Google Plus, Facebook. Go and have a look there. Go back to freeagent.com, have a look, and all the information there. If you're using FreeAgent already, brilliant. We'll hope you filed with us. If you're not, there is still time to do it. So go take a free trial, have a look at the pages about how to file self-assessment through FreeAgent. We also have an email crash course currently ongoing as well that you can sign up for, and the self-assessment survival kit over there as well. So there is more than enough that if you're coming to this late in the day and think, oh, there's not enough time left, there's only 2 weeks, there is. You can do this.
Yeah.
So just go over and sign up for those. And I think that is it for today.
Yes, I think so too. So thanks, Adrian, for your time.
No, thank you, Emily, as always. And hopefully we'll see you next time. And remember as well that this video will be going straight to YouTube afterwards as well. So go find it there, and you'll be able to see it again if there's anything that you heard or you missed or you want to go back.
Great.
Brilliant. I hope we'll see you next time.
Take care, everybody. Bye-bye.
Bye.